Hey my friends, Dr. Barry Burns here with Top Dog Trading, and today we go to part 2 of our little series, Forex Charts, Support and Resistance Tricks. So obviously there was a part 1, and if you didn't see that, then I'd say go ahead and watch this video first while you're here, and then after you watch this one, go ahead and type in the exact same subject except for part 1 and watch the first part because that covers things not in here. Okay, so the basic premise that we talked about in part 1 is that support and resistance levels are actually zones and not lines because of the market being rather imprecise because of masses and masses of people trading, and you got hundreds, millions people all trading this stuff, and so not everyone's going to buy, sell, take out stops, take profits at the exact same place, and that makes markets a little messy. So when it comes to resistance, for example, here's a resistance level at a previous swing high. So that's the high, obviously. Now, in the last video, in part 1, we talked about what happens when you put in a lower high, but it still reaches the resistance zone. This time we're going to talk about the exact opposite, how to determine whether the market is broken through resistance if you put in a higher high. So a lot of people think, oh, if you put in a higher high, then that resistance was already broken. Not necessarily. Not necessarily, again, because it's not really a line, even though it looks like it's a line the way we draw it on there, but it's truly a zone. So here we go. So let's take that off here for a second. We've got our line already brought there. So now, here at the next bar, we come back up to that resistance level, that zone. This was the high. And now we put in a higher high. Technically, that is a higher high, but have we broken the resistance yet? And the answer is no. It's not broken, it's what I call pierced, because a couple things, but number one, the market closed in that bar, closed back down below that previous high. So it tested prices above there, but at least at the moment, we would have to say that this previous swing high is not literally broken, but the market is testing it. The next bar, still not broken. We put in an inside bar, so that's just neutral. And that sort of thing happens a lot. It's very common when we come into support resistance zones. Quite often, if a lot of people see that resistance zone, then they're not sure yet if it's going to break or if it's going to bounce off of it. And so the market tends to pause. People are kind of waiting to see what will happen. Now, the next bar, it does put in not only a higher high, but also closes above the previous swing high. So again, here's our previous swing high, and now the bar closes above the high. I still do not consider the previous swing broken, but still just pierced. And the basic concept here is that we want to see above this resistance level a real commitment of the traders in the marketplace. Again, because you got so many people buying, selling, the market isn't going to always hit it to the penny, the pip, the tick. It's going to go a little bit above, a little bit below, and we need to give it that allowance. So at this point, you see the candlestick is still half above, half below, and so we're still going to say, okay, we're in this resistance level, but the market hasn't decided yet if it's going to go through or if it's going to bounce off. The next bar still hasn't decided. Why? Because it's an inside bar to the previous bar. All right, next bar, boom. Now it has decided. Now that's a commitment. So the rule I use, this is the bottom line rule, is that we need an entire real body, meaning the entire red or green part of the candle, to be above the high of the previous swing high. When that's occurred, then I consider that resistance level actually broken and the market having committed to saying, yes, we are now considering this resistance no longer to be resistance, could turn into support later. But anyway, for the time being, the market is seeing that, yeah, we believe that the market is worth more than the value over here. There's a real commitment of money, buying and selling. And if we go a little further, it keeps going up, keeps going up, keeps going up, and now obviously it's really broken. But our signal that we would consider it really decisive would be this bar right here. Okay, let me show you another example. All right, so the last one we saw where the market did break through the resistance level. Now let's see this one where it does not, so you can see the opposite. So we'll go off of this swing high here. And so there's our swing high. Now, when we come back and we retest that resistance level, what happens? We technically put in a higher high. But would we consider that this resistance level or zone is broken? And the answer is no, because the market has not really made a big commitment to it yet. Yes, it's put in a higher high. Yes, it's closed above the high, but it opened below that, and this candle is splitting that horizontal line. And so therefore, there's not a strong commitment up there yet. It's still just in the area of being messy, the messiness of the bid auction place, the bid-ask auction place. And then, as you can see, of course, the very next bar comes down. And so that resistance was not broken. It was tested, had a little bit of, again, just a chaos where market go a little bit above, a little bit below the line. We have to allow for that. And now we have a rule for it. And that rule is the real body of the candlestick has to be completely above this resistance line. It wasn't, and then the market completely rejected that and came on down, and resistance held. So that's the rule. It's very simple. It's very objective. If you like this video, please click the like button below and leave a comment telling me what you'd like me to cover in future videos. Also, I'm giving away one of my favorite trade strategies. It's called the rubber band trade, and it has an extremely high win-loss ratio. It's a simple strategy. You can learn in about 26 short minutes. I'm going to give you that strategy absolutely free. So to get the video that explains that trade strategy, simply click on the image in the top left corner of this video, or if you're on a mobile device, you can click on the little eye with a circle around it in the top right corner of this video. And once you do that, I will go ahead and personally email the video to you.